And welcome back to this beautiful Saturday. The question is, when should you buy and when should you sell? Today we're going to speak about none other than how to trade the NASDAQ 100. One thing to keep in mind, that what I'm about to show you is just for illustration purposes, and it's not a guaranteed 100% move, but it works most of the time. And this is probably what people make you pay 1,000 or 200,000 or 2,000 and a month for. I'm going to be revealing exactly how people trade the NY session each day at the market. When they say buy, TP is open, SL is open, this is a high risk trade, enter with what you can afford, don't do that. You know that signal groups that you pay for and they tell you this is a high risk trade, manage that, or stop loss is open, and you go like fuck, but how far is the stop loss open? Any case, let's start. As always, if you are new to the channel, a sub would be appreciated, and as always, if you enjoy the content, please smash the like button for the YouTube algorithm. Let me know in the comments below exactly what it is that you'd like for me to cover in my next video. Now, the first thing that I want to speak about is the breakout of an accumulation phase. That's it. We're just going to speak about that. Now, if you don't know what an accumulation phase is, accumulation is basically a stock in the accumulation area may be about to break out. When a stock price doesn't fall below a certain price level and moves sideways for a certain extended period, this can be seen as an indication to investors that the stock is being accumulated by investors, as a result about to take off. Now, if you don't understand what I just said now, it's quite easy. Think of it as a train. If you've got trains where you live, think of it as a train. Okay, the train moves. Okay, the train moves on tracks. Sometimes the train comes and the train will get to a station, any station, Belleville station, and the train stops there. Now the train had moved all the time as it goes, right? The train goes. Now the train stops, picks up more people, okay? Picks up people, stands there for like a minute or two, picks up more people, and it starts moving. And this is how the market moves, stop, accumulates stop losses and everything, accumulates more money, boom, then it goes again, boom, goes again, boom. And today I'll show you exactly how you can utilize this in the market as well. Now we're going to look at two scenarios over here. Okay, two of them. Now the first thing is we're going to look at this bull run. We're going to look at this massive consolidation phase that we had over here, and then we're also going to look at this bear run that we recently had there as well. Now also keep in mind that this area that you see over here, that was a daily consolidation. As you can see here, the market had consolidated there on the daily time frame. Now the best way to apply this strategy is on the 4-hour time frame, and yes, just like your people do it before the NY session opens and they say, guys, we're gonna buy the NASDAQ because I know it's gonna go up. Because you know that, people, well, guess what, you can say the same thing before the market opens. The first thing you want to see is you want to see an area of accumulation. Now this normally happens just before the market opens. Then what you want to do is you always want to look for the start of the accumulation. Always starts with the market would test one area at least more than one time. There we had it tested once, twice, 3 times. That is the high of the accumulation, right? That's the high point of the accumulation. Then you'll do the same thing over here. Okay, market printed structure there, tested that accumulation. So now we know that we're in the phase of an accumulation right there and then. What you then want to do is because you need to obviously make sure that you because brokers, they've got a good way of making sure that you don't get in on the move. So what you want to do is that you want to wait for the first candle to break out of the accumulation phase, and this is exactly what we're at over here. Now what you do want to be mindful of is you want to make sure that the candle actually breaks and closes above the accumulation phase, because the last thing you want to do is you don't want a candle that moves in this accumulation phase at the NY open that does this, and then you buy, then the candle says, wow, no, that's not what I was supposed to do, and it closed back below a wick. Now there's one thing that I've learned throughout my years of trading is that the first candle, the first spike in the market is normally the liquidity candle. And we can see it here. when the market enters a phase of accumulation, there will always be a wick at the bottom and a wick at the top. This is for the guys that sold here with their stop losses here. This is for the guys that bought here and their stop losses there. So you always want to make sure that you want to wait for that wicks for the what they call it, this the stop hunt wicks to be done there out as well. So once you get a clear break above the structure, what you want to do is you want to make sure that you buy the market as close to the breakout of the accumulation as possible. And the reason why I say that is you don't want to wait for the market to pull back right till there. Sorry about that, guys. So you don't want to wait for the market to pull back right till there. Why? Because why? Wicks in the market is a sign that this is a price where the market had visited once. So there's a possibility for the market to just go and test one of that wicks and then continue to the upside. What you do want to do is you want to get into as close as possible to the level of support that got broken that is now turned resistance. So what I would advise you to do is just make sure that you get into, or you can even like buy to that wick as well. And you know what the best part about this strategy is that your stop loss is not going to be here or down there. All you do is you put your stop loss there and you look for a potential entry close to the highest wick that we had over there. And that stop loss over there is a very tight stop loss. But we know that this was an accumulation phase that the market had clearly shown us signs of breaking out, which was that massive green candle. And we can see there the market after that just started taking off. Now let's talk about the next accumulation phase. Here we had another accumulation phase here as well. Now you're probably going to go like, yeah, but what is this stuff that is going on here? Unfortunately, this was the accumulation phase. That was the high, this was the low. The market tested it, that area multiple times. Same principle and same concept applies. What do we wait for? We wait for a massive green candle to break out of the area of consolidation. We want to enter as close to the high wick or the high point in the market over there. Where's our stop losses going to be? Our stop losses wants to be below any structure that was identified in the market, which was there because that's a level of resistance. And you want to make sure that your stop loss is protected by structure. So what did the market do? The market came boom and the market went out of that and continued to the upside. Now you might go, Jesus, but this looks like very easy and this is like very easy stuff. Trust me, it's quite easy. And what you can do for yourself, just go back on the NASDAQ and just go see how this same stuff plays out over and over again. Let's look at this over here. Now this was the accumulation phase. We had a 1, 2, 3. Well, we had a 1, 2 because this is structure. So the market printed this accumulation phase over here. Alright, that was the accumulation phase. And this was the wick that I was speaking about earlier. And this was the fake out in the market as well. Because here we had a 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. So with all of that touches over there, this is considered the area of accumulation. This was a fake out, and this was another fake out. Okay, now as I said earlier, you want to make sure that you get your entry as close to this low in the market, and your stop loss will just go in there. That's it, quick and easy stop loss. And then boom, market broke out, clear red candle. Okay, remember we want the clear breakout, retest, then the market went and tested where we first bought it from again. Right, good. You get the concept now? Beautiful. Next accumulation that we had, here we go. This was accumulation, right? Here we go. This was a stop hunt. That was a stop hunt. There's nothing more to this than that. Stop hunt, stop losses. The stop hunt kings are back. What do we get? We got a clear break. We waited patiently. Okay, we want to get in as close to the highest wick as possible. We also want to identify, we've identified that this was the area of consolidation because this is where the market had tested and rejected it the most. We want to make sure that we get our stop losses in just below this area. The market broke out, and this is the best thing, is you always want to wait. I don't care where the market goes, the market always has to come back for the pullback. Let me clear the charts. we'd have been in there and we'd have run this wave nicely to the upside. Right now we're going to wait for and look and wait for the next accumulation phase. Here we're at 1 touch, 2 touch. This is going to be the accumulation phase for us. We're at 1 touch, 2 touch, 3 touch, 10 touches. Next accumulation phase is going to be, let's see, it would be here. 100% here. Why? Because we're at 1 touch, 2 touch, 3 touch. The accumulation phase is normally where you get most touches that are taking place in the market. Now, like I said, you always want to make sure that you get in as close to the last week or the close to this weeks that you get in the market, because that is a sign of a price that the market had gotten into. Once the market had given us this clear break, so you want to always wait for a clear break, and that's exactly what we waited for. All what they do is you just set a sell stop. But you want to make sure that you get in with these weeks. So you set your sell limit or your sell stop, or you could have even just sold the market over there. The market just started melting to the downside, and then we went up again. Okay, but let's continue this move. Next thing, let's clear the charts. Next thing we can see here is we had another accumulation phase over there. 1 touch, 2 touch, 3 touch. Here we're at no touches, really no touches, so we're gonna have to go with this accumulation phase that we're at over here. Why? Because this is where we had multiple touches in the market. There we had like 1 touch, there were like 1 or 2 touches, and this is also considered quite low, but okay, we have to work with what we have. So here we had a break, a retest. The next candle came for the retest as well, but we had a candle that actually went in close below that level. This is the wick that we want to target, so we would have probably gotten somewhere in very close to that wick there, and then the market would have started the continuation to the downside. Now let's clear the charts and let's look for the next area of consolidation or area of range. Here we had another area of consolidation. There was one couple of touches over there. What color is this candle? That's a green candle. So this was the structure in the market, red and green candle. So we're going to go with that area over there. Okay, so we're going to use this as an area of consolidation, although because we had 1, 2 touches there, like there's nowhere else where we had multiple touches in the market. And remember, all of these things normally happen just before the NY open. Next thing we can see, we had a clear break. Market came back, retested that area, and started the continuation to the upside. Now this story will go on and on and on and on and on and on. For those of you that joins people that charges you a lot of money for NASDAQ signals, this is how they trade. Okay, accumulation, clear break, retest on that wick, down we go. Okay, sorry. This is also a sign of deceleration. So where we had a nice run, the market pulled back, but you can see the market's trading sideways, broke out of that bearish flag, like some people with their fancy names. And guess what? We are back at a area of consolidation here again. So the NASDAQ at the moment is consolidating once again. Now, if you've paid attention to what I said, now all you have to do is you just wait. 1 touch, 1 touch, 2 touch, 3 touch, 4 touch, 1 touch, 10 touch, 20 touch. Okay, and when the market accumulates like this, we're just waiting for the next breakout. The easiest way to trade this is wait for the break and the retest. Now do yourself a favor, today is Saturday, unless you're out there partying with money that you cannot afford to drink and all of that stuff, you can go back 20 years and you'll see this happen over accumulation, breakout, accumulation. There we had a break to the downside, fake out, accumulation, break, accumulation, break, accumulation, break, accumulation, break, accumulation, break, accumulation, break, accumulation, break. You can just make a song about this as well. Then you can go on the US30, you can go on any stock in particular, and just go and see this. Like I said, this is not a 100% strategy, but this is what you pay 2,000, 3,000 and for, and they tell you keep the stop losses open. That's the best way to trade a stock if you're not a swing trader. Like this is the easiest way to trade it. The accumulation, breakout, retest, be able to accumulation, breakout, retest. There we go. Accumulation, and you'll see this take place. Accumulate there, accumulation. Sorry about that. I'm not going to go into detail with all of these things. Accumulation. Sorry, there we had another accumulation phase, breakout, accumulation. It's like a song already. Okay, now you can go on a demo and test it on here. Yeah, very easy. And then go on the US30. Just go and see this stuff happen on the US30. Okay, don't pay for NASDAQ signals, because this is what they do. This is what they do. Unless they've got some magic wand, but this is what they do. If they are not doing that, then they are trading price action. Price action. Yeah, and it's easy to identify price action as well. Boom, sell, 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 buy, 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 sell, 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 buy, sell, and you can go on higher time frames also. The easiest way to trade price action is on higher time frames, right? Buy, sell, 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 buy, 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 sell, sell, buy. That's it. Like, if you've got no rules, and that's basically, then this is the easiest way to trade. Trust me, this works to an extent, but it's got a very good risk to reward, because your stop losses is well secured in the market as well. Now guys, that's all from my side today. Hope you guys enjoyed the video, and as always, thank you for your time, and cheers for years.